Keep our minds entertained for a whole 90 seconds. There we go, I guess. Internet's slow today? Strange, everything's a little slow. Hey, guess what's on the calendar today? Yeah, boy! Yeah. Guess you're supposed to tell it to loop. Huh, YouTube seems glitchy today. Is everybody all right? Are you there? Glitchy day today? Yeah, good morning. Answer the poll, please. All right. Time to get going. Good morning. Let me turn down that royalty-free music, YouTube. Hey, good morning. How you doing? Let me get rid of that. All right. So we got CPI today. Yeah, it's very important. Yeah, and it's the first one to fully incorporate the tariff data. So it should be pretty exciting. We're only about 10 minutes away. We want to look at headline. We want to look at core. And then we'll go through our routine gold, oil, and Bitcoin and a bunch of others. And then at the end, we will do viewer's choice. So let's get on with it. Let me remind you that trading, was the mic off? Was it really? Well, it says it's on now. So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So you're saying this one? This one is off? Mohammed? No, it looks like it's on. Yeah. Yeah. All right. So I just want to make sure because if I fix it now, then it won't be a problem later. You see what I mean? So anyway, CPI, I've asked you to participate in our poll. There's a few minutes left. I want to go through part of our routine before the news comes out, which is not a lot. Okay, so let me know what you think. What are you trading today? Very risk on, risk off, very risk off. Part of that's going to be based on how you feel about CPI. I would imagine. I mean, I didn't. Maybe you have different rationale. I don't know. I hope you have rationale. Yeah. So we will take a look at all kinds of things today. Obviously, we have fundamentals, we have technicals, we have sentiment. So we'll go through that. We'll go through the big assets that people love to trade, like euro, dollar, and pound, yen, and gold, and oil, and Bitcoin. Euro USD, that kind of stuff. And then we'll do a viewer's choice. But we got to get ready for the news. So before we do fundamentals, we got to do our sentiment update. The US dollar is little changed ahead of US CPI data. What key levels are in play through CPI?
U.S. Pres Trump. Our deal with China is done, subject to final approval.
Mixed trend in world markets.
Canadian dollar soft and trading somewhat defensively despite higher oil prices. Scotiabank.
Trump. U.S. will allow Chinese students in colleges.
U.S. dollar, all eyes on U.S. CPI. Scotiabank.
Mexico industrial output, year over year, down to 4% in April from previous 1.9%.
Crypto.Today. Bitcoin, Ethereum, XRP mute reaction to U.S.-China trade agreement.
Gold edges higher ahead of U.S. CPI inflation.
Russia says it's ready to remove highly enriched uranium from Iran.
Isn't that cool? That wasn't an update. That was the most recent headlines that have just come out in the last few minutes. Pretty cool. We can see that we're 5 minutes away from the United States Consumer Price Index news release. Okay, we want to look at headline year over year. and we want to look at month over month, and we want to look at core. The reason we want to do all that is to separate out non-tariff and look at tariff specific. Isn't that cool? Yeah, it is cool. Oh, dang it. Of course it's cool. Just pop that up there. Very cool. Okay. Yep. So we got quite a few votes right now. Thank you. I appreciate that. We have a statistically relevant data set. And 50-50, basically, risk on, risk off. But that is what the market is showing right now. Let's do a little sentiment since we got 4 minutes later, or we have 4 minutes till the news. Okay. We're taking a look here. Silver, favorable. Pound yen, favorable. This is market sentiment. Aussie dollar, favorable. Euro pound, favorable. Kiwi dollar, favorable. And USD yen, negative outlook. Pound dollar, positive outlook. So we got a lot of dollar weakness here. And maybe some pound strength or maybe some yen weakness. But when we look at this, like silver, for example, 45 articles so far in the last 7 days. And most of them are, it's almost very bullish, silver, based on market sentiment. This is media reports. And of course, retail follows that, right? So one of the major sources, of course, is FX Street. And so when FX Street writes about silver being positive or almost very positive, well, their readers very often can just say, I guess I'm bullish on silver as well. So you might want to keep that. So find your favorite thing and make sure you're aligned up with the broad market sentiment. Huh? That's sort of the media review. So I suppose I want to look at this one most. And then you'll want to pay attention to core and month over month. If so, here's our month over month. If it's 0.4, 0.5, now I kind of want to look at both right now, both core and non-core, because core takes out oil, and Christine Lagarde at the ECB was talking about oil, energy being down, and everything's good in Europe, and okay, but it hasn't been for at least a few weeks. Does it start creeping back in? What if the oil rally lasts? Now, that we have some data that may argue against that, but nonetheless, if if energy prices falling in the first part of the year contributed to the ECB success, well, what if that doesn't continue? And then also, how does this impact monetary policy at the Fed? So you'll need to look at a lot of these things independently. So month over month, core, non-core. Headline, year over year, core, non-core. Look at them and then kind of look at them separately, and then from that try to extrapolate into the future. Cool. 53 seconds, bruh. It's nice, huh? So here it goes, guys. Here it goes. All right. We are 30 seconds away from CPI. 30 seconds, 25 seconds. 17 seconds till CPI. Look at year over year, month over month, core, non-core. I'm going to look at this number here. And the number is it going to be higher? Is it going to be higher? Is it going to be higher? 2.6, 2.7? 2.4! Wow! Higher than before, but not much. Okay, could be worse. Could be worse. Okay, let's take a look at some of the other headline data. We don't need to get the price. Core 0.1. It's actually better. Oh my goodness, the market's probably not ready for this. Inflation 0.1. The market's on fire. Okay, let me get this out of the way. Cool, dude. Let's take a look. How we doing? Stock indices, love it. Yeah. So what does this mean? September's back on the table. Yeah. Yeah. Ooh la la. Yeah. Oh yeah. So neat, man. Neato. What a neat thing. Let's just let this play out a little bit. This is the Dow on the fiver. This is supposed to be S&P. Let me update that. Yeah, S&P, yeah, you know me. Nazi, let's put them all on the fiver just so we can see the initial reaction. And I'm going to cover up Nazi, or do you care about Dow? I guess you're more Nazi than Dow, most likely. So I'll appeal to you, my friend. Cool, man. So we'll let this play out. Are you looking for a Fibonacci retracement? Are you paying attention to things like pivot points and all that kind of stuff? I imagine you are. 4 hour S&P, we're just riding that beautiful 21, riding that 5. Life is great. Life is good. Life is beautiful. United States Consumer Price Index Core SA climbed from previous 326.43 to 326.85 in May. Breaking. U.S. CPI inflation rises to 2% in May versus 2.5% expected. United States Consumer Price Index ex food and energy year over year below forecasts 2% in May, actual 2%.
United States Consumer Price Index year over year came in at 2.4% below expectations, 2.5% in May. United States Consumer Price Index MOM below expectations 0.2% in May, actual 0.1%.
FC 100 up slightly as investors await further news on trade, U.S. inflation data. Nice. Okay, cool. All those headlines just came out, obviously. I'm waiting for the media to write about the subcomponents of CPI and their changes to headline and core, and then update me while we keep trading. Never take your eyes off the charts. So we're looking at this NASDAQ. By the way, I have a dream. It just occurred to me through meditation. And let me ask you if you guys would like me to focus on maybe making the dream a reality. How many people would like both the patterns? Well, let's do this. The the technical patterns that we have up here. Okay. How many people, for example, if you're trading NASDAQ or the S&P 500, how many people would like these drawn on their charts? Directly inside of it, our MetaTrader platform. Would anybody find that valuable? Especially if it was no additional cost to trade our subscribers. The second thing, and this is what hit me in recent meditation, how many people here would find it valuable to have our headline news radar, aka our squawk box, embedded directly into our MetaTrader platform? So while you're trading, you can hear the news inside your MetaTrader platform. Hmm? So anyways, 4 hour, we're trying to ride it up and hit that weekly target. Okay. Right, Sky Killer, but that's what we're looking for. We are looking for the impact of tariffs and the ability or willingness of businesses to carry the cost on their own shoulders. What are your concerns about the squawk? I thought you guys loved the squawk. I love the squawk. If you don't like it, I'd like to stop paying for it. I love it. Love it. All right, coming up to our conservative daily
U.S.
target.
CPI inflation rises to 2% in May versus 12% forecast.
CPI falls to 2.4% year over year in May, down 0.1% MOM.
Well, of course, you could just turn it off. I'm just saying, wouldn't it be cool if you simply logged into your MetaTrader platform or our MetaTrader platform, and half our tools are built in to the MetaTrader platform? What if we had fundamental scores printed right on the charts? What if we had technical patterns printed right on the charts? What if the squawk box and sentiment indicators were available inside the platform? Okay. Yeah. Yeah. That's what I'm thinking. So you could log into the website, but what if you had everything inside of MetaTrader? So you could just log into MetaTrader and TRADARS loads inside of MetaTrader. So you don't even have to access the website if you don't want to. I think it's even possible to do our webinars, our live streams, our performance coaching inside of MetaTrader. Yeah. Yeah. Yep. So the money you keep putting in every month, I keep reinvesting every month. And so that's my sort of thought for the next 6 months. Wouldn't that be great? Yes, you'd be able to turn it on and off. Yes. Yeah. So anyways, that's my thought. And then of course I want TRADARS to be free. So that's my other thing that I'm working on. If you're a successful trader, you should be using TRADARS and it should be free. So that's my dream. All right, so let's go through our routine. The news has happened. Okay. Oh, did I miss David's comment, or was that from before Monday? Yeah, so it was seen here. I forget which chart it was now, but it's easy to pop in there. So get ready for that roll reversal. But this trading session, 5 minute chart. Yeah. Okay. Does anyone uh, want a quick overview of what this says? Yes, Sky Killer, very much so. But I started building traders.com instead. And I might get distracted on my next project, and that is my my goal in the next 20 years is to become a Harvard professor. And so I figure I'll need a few shots, a few cracks at that. So in 2026, right, I'm applying to be a professor in 2026. just the summer months, and I would still be able to coach. Yeah, coach meaning trade and be with the traders community, but at the same time teach economics at Harvard summer school. And so I'm working on that as well. And would that distract um, from the book writing? Yeah, probably. But once I got it down, one way I could play it is I was going to self-publish because my experience wasn't amazing with Wiley Publishing, although I have no regrets. Um, I was going to self-publish this time around, but you know what? It's kind of interesting. Harvard does publish, so it'd be interesting if I was if my books went through, since would be a professor, that to do a deal with them to publish my books.
U.S. official
Maybe put it in the
Trump to hold
courses.
China tariffs at 30%.
Sky Killer says, "Would you make any of those online those courses?" Well, we already have them at Investor Bootcamp. All right, so Davis says, "Yeah, I was asking if the 4 hour related to 5 minute structure entries." Well, let me just tell you what it means to me. I have to get my drawing tool up and running. And a managed account with 24-hour trade plan. Is that possible? Expand your idea there. Oh, the mathy stuff? No, I'm not going to do. I don't have an interest in that level of economics. That really was a turnoff. Okay. Yeah, I like the concepts. So, like, for example, the lecture I gave last summer at the St. Louis Fed at the professors conference. By the way, I'm putting that together. They've asked me to go back to the economic professors conference at the St. Louis Fed and teach again. So my opening lecture for my Harvard Summer School class is connecting GDP with the concept of happiness. That you know you know economics and public policy, economics and real life is what I'm interested in. The calculus part of it, I don't I don't know. So it comes down to how much Harvard wants me to do that. Okay. I mean, you can't be shy of the math, but I don't want to do a calculus. All right. So going back to David's question, and then I need to move on to our routine a little bit. This is the time of day you should be trading, and this is the time of day you should be. Okay. So when this turns blue, game on. When this turns pink, game on. And uh, could you move it a little earlier? Yeah. Yeah, it depends on your time of day. What I'm showing you is the overlap. This is the overlap of Asia and Europe. So this is European traders coming into the market for the first trade of the day. This is American traders coming into the market for the first trade of the day. Oh yeah, capital asset pricing model and stuff. Yeah, I'll do that, but that stuff. Uh, man, well, I mean, you want me to manage money? Okay, so now we're back into the role reversal area. Yeah. So there's nothing more to these boxes than time of day. Okay. So let me use maybe a vertical marker to say something similar. Okay. Asia open. Okay. Yeah. European open. US open. Uh it comes down to the amount of money. Okay. So it has to be a pretty big retail account. Trump is moving the markets. I don't know. I disagree with that. All right. So, anyways, this is what's moving the market, Richard. In my humble opinion, is the potential for monetary policy in September. Right. Right. So, yeah. So, let's we could take a look. So, again, dreaming. Remember, I told you I was in the breaking. U.S. CPI inflation edges higher to 2% in May versus 2% forecast.
Wall Street poised to
So
open
this is
moderately
the
down.
quarterly or the 15-minute update.
U.S. consumer.
I'll go ahead. So I told you last week I was in the CFTC website, I was in the Fed website, and I was in this website too. One of the things I'm looking at is for my team to plug into this data. And pull this data and put it directly into TRADARS. Would you guys be into that? Okay, so this is telling you the probabilities of the Fed funds rate in the future. There's a 99.9% chance, okay, the Fed will not cut interest rates. Well, 100% chance they don't cut interest rates. There's a 0.1% chance they raise interest. So here it is. It says E. 0% chance. Now, it's opinion, but it's not a survey. It's what's being priced into billions and trillions of dollars in bank-to-bank contracts. So wouldn't it be cool to have this directly in TRADARS and be able to extrapolate the probabilities? Yeah. Well, this is what I do when I'm on vacation. Not just working, but on vacation. Yeah. So what about the July meeting? Very, very small constituency believes that the Fed's going to cut at the July meeting. Okay, 16.5%. But most people, right? Powell doesn't really like them. Who cares about like or dislike? Yeah. Don't get caught up in all that nonsense. Stop reading the news, everyone, and start focusing on the economic data. Yeah. Yeah. And be careful of social media in particular. But all media. I'd rather you take all this economic data and you're writing the news. Okay. Well, see, Richard, that's what's happening today. So you said earlier that you thought it was Trump. I'm like, no, this is what's happening. Okay. And so, very, very small, okay, possibility in July, but nobody sane thinks about it. Yeah, no dig at you, right, about it, right? But just more like, I want you to be an economist first and foremost. I want you to write the news. I don't want you to read other stuff. Oh, Trump and Powell, they're at odds, and, Trump's going to fire him. And, dude, what a waste of time and energy. Yeah, yeah. So it's just more like advice, trader to trader. Um, the media doesn't seem to help. They're wrong just as much as they're generally correct. But they're also very biased. So if you only read one side, then you're not getting the complete picture. And dude, just read the economics and start your own blog. Yeah, you know what I mean? Start your own social media posting. You're like, you know, the sane economist. Anyways, so now what's going on, and now I'm commenting back with Richard. This is what's happening in my humble opinion. Yeah, all love back at you, man. All love. Okay. Okay. But be independent, to quote, um, was it Tupac? Got nothing but love for you. But, be independent. I kind of paraphrased that one, if you know the Tupac quote. All right. So here's what's going. What's going on? Let's go back a week ago. Okay. All right. So, or even a month ago. Okay.
Euro US dollar price forecast. Risk on rules. Sellers around 1.1500.
So this is more extreme, so it's easier to notice. 1 month ago, May 9th, 43% of the market thought the Fed would cut. Okay, so let's just say 40. 40% of the market thought the Fed would cut by the time we get to September. Okay, 40. 60% said no. Check this out. 60% now say there will be a Fed cut. And 30% say no. It's quite a switch. 10% says there will be two cuts by the time we get to September. So these are the knuckleheads that think July plus these guys. Okay? So right now, we've gone 40 to 60, which is a 50% increase in, so whatever. This is what's happened. Now, yesterday it was 53. Now it's 60. And that's very particular, Richard. Like, that's what I'm talking about. Just a massive spike in the ability for the Fed to cut by the time we get to the September meeting, but almost everybody thinks at the September. Now, if CPI was significantly higher, I think we would have a different scenario than what we're looking at. So you want to watch this over time. Okay. Okay. And then the next thing that you should watch is the December. Okay. 94% chance, 94% chance that we'll have a cut between now and December. That's pretty high. And then you can break it down. Is it September and December? Like how many cuts? Okay. We're somewhere between one or two. Okay. So by the end of the year, this is what's going on. Okay. So we're here. And if you look at this, on the as a curve or whatever, this is the peak, right? So you could say there's a pretty decent chance of one cut or two cuts. Much less significantly less than three or four cuts. Notice it's the same here as here. So therefore, the distribution is almost perfect, or what I should say is normal. There's a normal distribution of outcomes. And in this case, since the data isn't very sensitive, right? Like there's either one cut, two cuts, or three cuts. You can't have 2.2 cuts. So if you were going to take the average, it's two. But it's quite a beautiful distribution. Okay. This is called thin tails if you're measuring kurtosis. Normal distribution, there's no skew. Okay. You guys love statistics? Okay. And then you take that and put that um, into your trade biases. So now you have to understand how this would impact the stock market, the treasury market, the commodities market, right? And the currency flow. Richard says there's only two types of inflation: demand pull or cost push. Well, that's what it says in a textbook. Okay. But then you go to
Breaking news: CPI misses everything but the dollar rallies.
US CPI sends the US dollar Swiss franc lower, but there is a limit to the selling. Hyperliquid price forecast. Hype reaches all-time high as open interest surges 34% in June. U.S. stocks may see initial strength. On inflation data, U.S.-China deal. Bay Street seen opening on mixed note. Okay. Going back to the question if there's only two types. That's what the textbook says. So one way to do it is you analyze a closed economy, and there shouldn't be any inflation. Yeah. So how do you get, or if it was demand pull or cost push, it would be very minor inflation, just very, very, very minor, because you're living off all your own resources, and there's not a lot. Well, you don't have any foreign exchange, so your currency doesn't fluctuate based on the cost of products and services from others. It's much more pure, right? So you get a place like Cuba, and based on demand pull or cost push. So like wages are low. Okay, that's fine. So there's no wage pressure. Housing is practically free. Food is practically free. Okay, great, great, great. And then demand, once again, if wages are low, demand would be normal. It wouldn't be high or low. Now, demand for foreign goods or scarce goods, but sure, if your economy is closed, you can't have any foreign goods anyway. So that creates a scarcity. That would be a sort of a demand pull. But usually in a closed economy, you just simply substitute. Okay, so if apple prices, if there's a shortage of apples, you just buy more pears. And so your real CPI, not real, but your CPI basket adjusts. Okay. The point I'm making is with a country like Cuba, how do you get 150% inflation every 6 months? Is it demand pull or is it cost push? Neither. So your textbook is generally correct. But yeah, and that's where I always got into trouble in school because then I sit down with the professor and I argue everything. And they're like, all right, that might be real, but you need to just read the textbook. But anyway. Yeah, there are other ways. Milton Friedman, for example, says inflation is a result of printing money. And there's various forms of doing that. But nonetheless, it's a monetary phenomenon. The funk phenomenon! The funk phenomenon! So anyways, I would like to have this data built directly into traders.com. And maybe that's where we're going. I'm looking into it, and it's possible. Coming soon to you, maybe? Not soon, but anyways. Here we are. We're coming back on the pullback. Yeah, yeah. What's a big problem in social sciences? Well, no, what I find is the textbooks are teaching the general principles. So if you're taking the principles of macroeconomics, well, that is the principle of macroeconomics. Demand pull or cost push. Yeah, those are the principles. But then what if there was another course that said the variations of economics? Okay. It's not right. There's what usually happens or should happen in theory. I guess it's more should. What should happen versus what does happen. So you get taught the principles and then you get experience with reality. No, but if you can't figure out reality if you don't understand the theory. Okay, you're not going to go to play Wimbledon if you don't know the basic fundamentals of a tennis swing, right? But it's not. I wouldn't overdo it. Lots of exceptions. No, you're being much too broad and too general. No, no, no. Because if there were so many exceptions, then there'd be no value in having an economics.
Euro US dollar climbs above
education.
1.1450 after US inflation data. Gold's pause bodes well for the next leg higher. UBS.
Okay. So you have to be educated and experienced to know They're not exceptions. It's consequences of the decisions or the consequences of the actions or the consequences of the situation. Okay. And that's different than memorizing rules of thumb. Yeah. Unfortunately, most of the education that's out there is very, very, very generalized. So you understand supply and demand, aggregate supply, aggregate demand. You understand the factors of production, the possibility frontier curve. It's all correct, or assumed to be correct, because it is a science. But that doesn't, get you to an advanced level of understanding. It gives you a basic level of understanding. Yeah. And then you get experience from there. Yeah. And then you end up being, so, like, for example, I flew to Cuba. I sat down with the person that runs the foreign exchange for the entire country of Cuba and had a conversation. Curiously enough, I smoked a cigar and he did not, although it was offered. We had coffee. But yeah, but then you're qualified to have such conversations with a person that runs Forex for an entire economy. How did I arrange that meeting? I'm a badass sky killer. Yeah, actually, I've met with him twice. Yeah, yeah, we're acquaintances now. I don't know if we're friends, but next time I'm in Cuba, I'm definitely going to give him a ring. What's up? Yeah, it is nice. I don't know. This is off topic, of course, but some people ask me, does having an Ivy League degree matter? Yeah, if you want to meet people that run countries, yeah, yeah, it does matter. So, anyways, there we go. There's our maybe our little bouncy bounce. No, Sky Killer, think of it this way. I mean, we all have the same education. Okay, so my professors worked at the Fed. Great, fine. Is that great? Is that good? Yeah, sure. Is it required? Does it make it 10,000 times better? No, it makes it 20% better, but it's the same data, the same education. Okay. So why does it matter to go to Harvard or some other similar institution if there is one? It's a vetting process. Okay? It's a vetting process. Do you think it's easy to get into Harvard? Okay. More than 99% of the people that applied for my program, just for my program, more than 99% were rejected. Of the 20 that were accepted, half graduated. Not only did I graduate, I graduated with honors as an A student. and the program was adjusted because it was too hard. So they're all sort of vetting. I was in the less than 1% to get accepted through the vetting process. Then I survived the damn program, which lasted 5 years. And not only did I get through it, which half the people didn't, I graduated as an A student. So now, with no joke, okay. I'm trying to get the drawing tool here. Okay, that puts me in the 0.1% category based on facts. Okay. Well, thank you for your compliments. I do appreciate it. You guys are important to me, and I try hard. Right on, Sky Killer. That is really cool. I hope you find it. That leap is a difficult one. I made it long ago, but I still feel how important it was making that decision. So anyway, so it's really just a vetting job, a vetting process. But I'll tell you, you get the wink, wink, nudge, nudge look from other people that have done stuff like this, that I'm included in this secret society or something. Like, oh, you're a Harvard guy? Like, oh, well, I'm an MIT guy. Oh, well, I'm a Yale person. You know, and you just know that you've gone through that process. Okay. And so if you're in a room with, you know, with fellow Illuminati, you're like, okay, I know this, I don't know this person, but okay, I don't know the stranger in the room, but because he's in the cool kids club, let's say the Harvard Club of New York, he's one of me. He or she is smart. He or she is driven. He or she kicks ass. He or she can pick themselves up after being knocked down, because I know they've gone through the same process, and they're like Viking warriors. They're like berserk. They go berserk when necessary. Cool. And so that's all. That's what I mean by a vetting process. So it's like, is it required? No, it's not required. So there's two Forex traders: FX Trader 1, FX Trader 2. Okay. If their annual returns are about the same, okay, so there's nothing striking good or bad, because you don't want that. Strikingly good, there's a reason for it, probably risk. So an investor's trying to figure out, okay, I found a couple of traders that I think I'm going to put some money into, and their trading style fits my profile. So, let's say I don't want a scalper to produce 25% a year, but yeah, I got a couple of like mixtures of day trading and swing trading type people. They're not radically different portfolios. Like, I could create, and I think about it, I could create a portfolio of seasonal trades only, that it doesn't make a lot of trades, but it holds trades for months, if not years, where this one might hold days to weeks. Okay, well, then they would be radically different, and I would have to think about how that fits in my portfolio. But let's say they're both day trading and swing trading, and it all adds up to about the same. FX Trader has either no formal education or a normal education at some okay school. And if you're in a foreign country, some school they don't recognize, they don't know anything. So you're like, okay, well, guy's got an economics degree or an engineering degree. Like, great, but from where? Bangladesh. Oh, well, I don't know if that's any good. Is that good? Maybe everybody's got one there. Is it the same as the United States? Is it the same as MIT or Georgia Tech? No, probably not. So it kind of very quickly gets discounted. Trader 2 is me, and at my education shows Harvard. Does it play in a role? Does that play a role in them choosing me over the other one that has the same returns? Yes. And it's because it's either a flex or more likely the vetting process. It tells you about me that Harvard vetted 99% of the people away, and then the difficulty vetted 50% of the people away. And then of that, less than 0.1% graduated with honors. So it's probably closer to 0.05%. Okay. And they're like, yeah, I'll go with this dude. Is it fair? Well, that's reality because they're leaning on other people to do the work. Now, it gets you into
Pound US dollar holds above 1.3500 as US dollar loses strength after CPI.
Gold whipsaws on US CPI miss, and Trump comments on US China trade deal. Euro US dollar pushes higher after soft CPI, but stalls at key resistance.
So humans do this, and it could lead to problems though too. So I'm not saying it's perfect. So like Bernie Madoff knew a lot of powerful, rich people. Bernie Madoff also worked within various communities. He also had titles like being on the board of NASDAQ. And so how did he get on the board of NASDAQ? Well, all the right people knew him. Why did all the right people know him? Because he was in all the right communities. And what happened is it just built into everyone leaning on the other people's vetting. What they realized is nobody actually vetted them. Nobody actually vetted Bernie Madoff. They just assumed since everybody else knew him, since everybody else invested with him, because he was in everybody else's community, and I consider a board a community. So he sat on the NASDAQ board. Does that sound good? Would you invest into someone that has consistent returns and sits on the board for NASDAQ? Like, dude, he sits on the board with NASDAQ. He's got billionaires investing with him. Dude, this guy's, he's got, clearly it's good. Well, okay. And so nobody actually did any of that. So it's dangerous, right? It's dangerous. But nonetheless, that's how humans work. Okay. Cool. So because of the news, we've had sort of a different process than we've been doing recently. So let's do a viewer's choice, and then we'll move on.com. The market will be opening in just a couple of minutes for trading. That's the stock market, of course. What asset would you like me to cover before we split for the day? Give me an asset to cover. Viewer's choice, everybody. Euro dollar, S&P, pound yen, WTI, gold, Bitcoin. Now you have to give me a pair if it's Forex. I'm not going to cover all Swissy pairs in the next 6 minutes. Euro, Swiss franc. Blue. Nat gas. U.S. oil. Blue. Gold. Oh, great. Well, pound, dollar. All right. Well, this ain't going to work then because we're not getting any consensus. Viewers' choice. Gold, oil, Bitcoin, or euro. Okay. How about that? Yeah, I'll be in Edmonton on Saturday. There's a game on Saturday, and I will be in Edmonton. You have to answer the form, Richie. Yeah, game 4 on Saturday in Edmonton. Okay, we have 19 votes, and it's pretty obvious. Okay. So in that case, bum, 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 wait for it. No, wrong one. It says XAU. Oh, no. I know what happened. Oh. No. No, missing. Oh, here we go. There we go. Oh, game 5? Thank you, Dan. Yeah, game 5. All right. So we're going to end our day with doing some gold. 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 What do you guys think? Gold up, down, or sideways? What do you think? You have an opinion on that one? Up, down, or sideways? Well, let's go check it out. Okay. Our next target is 3,750. So you have to believe that. Okay. Now, if you go back to the beginning of the year and you're using technical analysis, and I assume you are, okay, this is an OOP, out of position trade, that gets you more aggressive for a higher target. Okay. So that changes your conservative target to the aggressive target. But then because your aggression is higher, there's a new that the aggressive target is now the conservative target. So what this chart says is that's the conservative target. And the new aggressive target is here. And you knew that on January 1. Now you had to believe in inflation. You mean from tariff or some other form of inflation? Yeah, maybe. I don't know. But that's how you read this chart. Target A, target B. So now you have to decide, are you still a bull or a bear? Fairly simple. So your target, yeah, heads up. We'll see if dotted might not be clear. We'll do this as bad as possible. Okay, so this is, we're riding the future 21. Oh yeah, baby, the future 21, where the 21 will be in the future, not where it is now. Oh, that's cool, dude. Oh, I know, right? So anyways, we're riding the 21, and so therefore, if you're truly a bull, 3,750. So now you can drop into smaller time frames and smaller pivots and set it up. Okay. Cool. So you do your technical analysis and you're like, okay, is it okay? Is it trending up? Well, sorta. There's the short term versus the longer term. Okay, so we've gone from the top of the range, and then let's say we get down to the bottom of the range. Do you think it'll make a higher high? And then do you think it'll make a higher low? I don't know what you think. Okay. Okay, but you have to put things into context. Okay, so now you're lining all of that up. Isn't that cool? Yeah. Okay, so you have your primary.
Australian dollar US dollar climbs to new highs north of 0.6500. Oil rises to 7-week high on US China trade deal.
So you have to find your time frame. Which one are you trading? The smaller time frame or the bigger time frame? So you can see I'm zoomed way out now to the daily. And this is the hourly buy zone. See that? So I'm going to have to draw it green. Delete. And this is our buy zone. Okay. And you can see it, we might be just trying to ride that for weeks now. Not hours, not minutes, not the rest of the session or the rest of, it's Wednesday, right? So not till the end of the week. It may take us a long time. But many people get lost inside these candles. They're buying and selling inside that candle. They're buying and selling in that. They're buying and selling in that. They're buying and selling in that. They're buying, and they lose sight to kind of what we're doing, huh? So if you thought we're heading up here, this should impact what you're doing. Well, that's what he said. But now it's what she said. He said, she said, bullshit. Boop, 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 boop. Okay. So anyways. Anywho. The market's open. Ding, 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 ding. I'll let you go to it. Please click like. Please subscribe. Please leave a comment on the recording. Please have a wonderful and ideally profitable day. Peace on earth. May the pips be with you. May your